Okay, welcome back, everybody. Now remember, everybody wants an offer in compromise, but not everybody's going to qualify. In fact, not everybody's even eligible to apply for an offer in compromise. So today, let's discuss alternatives to offer in compromises. Okay, welcome back, everybody. Just about everybody that contacts our office wants to discuss their circumstances, and immediately they want to hear about the offer in compromise program. And I get it, right? They are constantly bombarded on the radio and television. Settle for pennies on the dollar. This is you. Call now. Call today. And that's great. There are a lot of people out there that are eligible and do in fact get approved for offering compromises. We do a lot of them ourselves. But I want to take a look at some IRS data and discuss the stark reality of things. Not everybody is eligible, and even if you are eligible, it doesn't mean the IRS is going to accept your offer. So you better have a backup plan. So in this next slide here, we are going to look at data taken directly from the IRS website. And unfortunately, the last year the complete data was available was in 2017. But the point I want to make here is that even though the precise numbers are, in fact, different year to year, it's probably safe to say that the ratio is similar year over year. So let's see what we have here. In 2017, there were over 14 million households already in collection status at the IRS. And of those 14 million households, 62,000 of them submitted offers to the IRS. And of those 62,000 offers submitted, 25,000 of them were accepted, which is about a 40% acceptance rate. However, it's less than 0.19% of all collection cases. So, with that in mind, 0.2% isn't statistically in your favor. You better have some alternatives if the offer in compromise isn't for you. So let's take a look at alternative tax resolution strategies other than an offer in compromise. Alternative number one, an installment agreement. Now down at the IRS, an installment agreement is actually the most common tax resolution. And I know if you are listening to this video, nobody wants to go on an installment agreement and have to full pay their debt to the IRS. But it's not all bad. You may in fact be eligible for a penalty abatement. You may be eligible for a partial pay installment agreement, and we'll discuss each of those in another video. The good news is if you simply make your payments to the IRS, everybody will leave you alone. You have no fear of a wage garnishment and the embarrassment down at the HR department with your employer. You'll have no fear of a bank levy, right? Some people will go to swipe their card and pay for lunch and it gets declined because the IRS came and swooped in and took all their money. But if you're on an installment agreement and you're paying it and you're current with the payments, they will simply leave you alone and you won't have any of those fears to have to deal with. You should also know that if you're on an installment agreement and you get an income tax refund in future years, that refund will be intercepted and applied to your balance due. And if you think about it, it just makes common sense, right? If you owe the IRS money, they're not going to give you money. And then lastly, depending on the amount that you owe, will determine what kind of paperwork you're required to fill out and whether or not a lien will be filed. And we'll get into those details once again in another video. But in any case, almost everybody is certain to be eligible for an installment agreement. And although it's not the news you want to hear, it is a very common outcome. Moving on. Alternative number two, currently non-collectible status. Currently non-collectible status is designed to be temporary relief. Say, for example, maybe you lost your job and you don't have the ability to pay the IRS anything at this moment in time. So they will basically, in effect, suspend your collection efforts and give you a little time to get back on your feet with the intention that, down the road you'll be able to make payments. But the truth is, in certain circumstances, currently non-collectible status is a great tool for permanent tax resolution, particularly for people that are on fixed incomes and that don't expect to see any spikes in income in their future. What else should you know? If you're in currently non-collectible status, you won't need to make any payments on a monthly basis to the IRS at all. And it's also important to know that if you do get an income tax refund while you're in non-collectible status, that refund will then actually be applied to your outstanding balance, just like before, right? If you owe the IRS money, the IRS isn't going to give you more money. Lastly, it's also important to know that if you owe the IRS over $10,000, they will in fact file a lien. Now, in order to place your tax debt into currently non-collectible status, you must qualify for it using IRS Form 433A and following IRS financial collection standards. Alternative number 3, bankruptcy. So if you have significant creditors other than the IRS, or if the IRS is being totally uncooperative, bankruptcy might be your best option. Now, make no mistake about it, I am not a bankruptcy attorney, and I don't want to say anything that's going to get me in trouble or give you inaccurate information. But bankruptcy can discharge your federal income taxes if certain requirements are met. Withholding taxes that are related to the trust fund recovery penalty are not dischargeable through any type of bankruptcy. And personal income taxes are usually only dischargeable in bankruptcy, but only if the tax has been due for over 3 years. Also remember, if you didn't file an income tax return and you were assessed through a substitute for return, that income tax is also not dischargeable in bankruptcy. Once again, full disclosure here, I am not a bankruptcy attorney, but if that is the right method for your tax resolution, we can refer you to a very qualified bankruptcy attorney. Alternative number 4, innocent spouse relief. To qualify for innocent spouse relief, you must meet all of the following conditions. 1, you filed a joint return that has an understatement of tax that is entirely attributable to your spouse. Number 2, you established that at the time you signed the joint return, you didn't know and had no reason to know that there was an understatement of tax. And 3, taking into account all the facts and circumstances, it would be unfair to hold you liable for that understatement of tax. Truth be told, innocent spouse relief is not a very common tax resolution. A lot of people inquire about it, but I think that they genuinely misunderstand it entirely. A lot of emotions run wild through divorces or separations, but it is very specific what qualifies and what doesn't qualify. So for more information on that, feel free to contact our office. Do you have a tax problem with the IRS or state tax authority and need to speak to a licensed tax professional? Call Patriot Tax Professionals for an honest assessment of your circumstances at 877-782-9383 or visit our website at www.patriottaxpros.com.